Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Sea Limited, the Southeast Asia digital platform that posted 47% revenue growth on Shopee, Sea Money, and a Garena revival.
Sea was founded in 2009 in Singapore by Forrest Lee, initially as Garena, a digital entertainment platform focused on gaming. Shopee launched in 2015 and Sea Money followed as its digital payments arm.
Sea listed on the NYSE in 2017 as Sea Limited. At peak valuation in 2021, Sea exceeded $200 billion in market cap as Shopee became Southeast Asia's dominant e-commerce platform.
CEO Forrest Lee has led the company since founding. His strategy: build each segment to regional leadership before extracting margins, accepting near-term losses in exchange for compounding user bases.
Most recently, revenue was $7.1 billion, beating the $6.4 billion estimate by more than 10% and growing 47% year over year. Shopee GMV was $37.3 billion, up 30%.
Sea Money's loan book grew 71% year over year. Garena active user bookings rose 20%, the best quarter since 2021, reversing a multi-year gaming decline.
The moat is the integrated platform. Users who shop on Shopee, pay with Sea Money, and play Garena are embedded across Sea's ecosystem. Cross-referral loops reduce acquisition costs and improve lifetime value.
Shopee's geographic reach is the competitive advantage. Across Indonesia, Thailand, Vietnam, the Philippines, Malaysia, and Taiwan, Shopee has logistics and payment infrastructure competitors cannot replicate.
Sea Money is the long-run earnings engine. Digital lending in underbanked Southeast Asian markets carries strong unit economics. The 71% loan book growth signals the flywheel is accelerating.
Against Lazada and TikTok Shop, Shopee competes on local market depth and logistics reliability. Lazada has struggled with execution. TikTok Shop is growing in Indonesia and Thailand, the key risk.
Southeast Asia's digital economy is structurally underpenetrated. Internet adoption, mobile payment usage, and e-commerce penetration across Indonesia and Vietnam are still in early innings relative to China.
The EPS miss, 67 cents actual versus 76 estimated, reflects continued investment in Shopee and Sea Money expansion. The market chose to price the revenue acceleration and GMV growth over the profitability gap.
Currency exposure is a structural consideration. Sea reports in US dollars, but operates in multiple Asian currencies, creating translational risk in periods of dollar strength.
Forrest Lee is Sea's founder and largest individual shareholder. His strategic patience, building scale before monetization, has defined Sea's trajectory and explains the Shopee build-out losses.
Lee's thesis is that Southeast Asia's digital infrastructure is entering a decade-long build-out, and the platform that wins logistics, payments, and entertainment simultaneously will compound margins.
The regulatory environment across 8 jurisdictions is a persistent overhang. Distinct regulations in each country require Sea to manage a complex compliance footprint that domestic players avoid.
With a market cap above $50 billion and 47% revenue growth, Sea trades at a premium to regional peers, justified by platform breadth, but vulnerable to any Shopee GMV slowdown.
Sea Limited just posted 47% revenue growth with Shopee GMV up 30% and Sea Money's loan book up 71%.
Let's get into the three-segment engine and how each piece is compounding.
E-commerce, digital finance, gaming. Sea is Southeast Asia's integrated platform at the center of a decade-long digital economy build-out. Now let's get into the numbers.
Sea Limited just crossed $1 billion in adjusted EBITDA in a single quarter for the first time in company history. Revenue hit $7.1 billion, up 46.6% year over year, and they beat the estimate by nearly $500 million.
Welcome to Charged Alpha. I am Lana, here with Hudson. This chart shows the moment a loss-making growth story re-rates into a profitable platform. The stock popped roughly 8% on the print, and this breakdown explains exactly why.
Sea Limited is a Singapore-based digital conglomerate, founded in 2009 by Forrest Lee, who still runs the company today. The business spans 3 segments: Garena, the gaming arm; Shopee, the e-commerce engine across Southeast Asia; and Sea Money, now branded Money, the fintech and lending platform.
Their core markets are Indonesia, Thailand, Vietnam, the Philippines, Malaysia, and Taiwan. The flywheel is deliberate. gaming funds growth, Shopee captures commerce, and Money monetizes the installed base through credit. It is the same compounding platform logic that Mercado Libre built in Latin America, now running across Southeast Asia's 700 million consumers.
Let us get into the numbers. Total revenue came in at $7.1 billion, up 46.6% year over year, blowing past the $6.61 billion estimate. That is nearly $500 million above consensus, a monster beat for a company at this scale.
Non-GAAP EPS landed at 84 cents versus the 75-cent estimate, a 12% beat. GAAP net income was $438 million, and the headline metric, adjusted EBITDA, crossed $1 billion for the first time ever, up 9.3% year over year.
Shopee revenue hit $5.1 billion, up 45%. Gross merchandise value reached $37.3 billion, up 30%, on 4 billion orders, up 29%. Analysts specifically called out AI-enhanced shopping inside Shopee as a conversion rate driver. That is real operating leverage showing up in the take rate.
Money, the fintech arm, posted $1.2 billion in revenue, up 58%. Loans outstanding ballooned to $9.9 billion, up 71%, across 38 million active credit users, up 35%. C is becoming the consumer credit infrastructure layer for Southeast Asia's digital economy.
And Garena, the gaming segment many had written off, delivered $696 million in revenue, up 41%. Management called it the best quarter since 2021. Quarterly active users reached 666.5 million. Bookings hit 931.4 million, up 20%.
The EBITDA breakdown by segment is revealing. Garena generated $573 million in adjusted EBITDA. Money generated $275 million. Shopee is now at EBITDA positive and scaling. The three-segment flywheel is genuinely compounding, all three lines contributing cash simultaneously for the first time.
Forrest Lee founded C in 2009 and has run it through every chapter. The Garena gaming growth phase, the Shopee land grab across Southeast Asia, the painful cash burn years, and now this profitability inflection. His dual-class ownership structure means he will run C on his terms for as long as he chooses. For investors, the founder-CEO alignment with the long arc of the thesis is a feature, not a risk.
The street focused immediately on the EBITDA milestone. Crossing $1 billion in a quarter is the inflection point where institutional investors re-underwrite C from a growth story to a compounder. The Morgan Stanley and Goldman Sachs notes both led with the milestone, not the revenue beat.
Shopee's AI-driven take rate expansion is the most closely watched operating metric. Conversion gains flow straight to gross margin because Shopee's cost base is largely fixed, logistics infrastructure already built, seller network already established. Incremental GMV volume is near pure margin.
On Money, bulls argue that C is building the dominant consumer credit platform across Southeast Asia, a market where traditional bank penetration remains low and smartphone access is the primary financial interface. The 71% growth in loans outstanding is the lead indicator that the credit flywheel is accelerating.
Bears will point out that loan growth that fast can mask credit quality deterioration. Non-performing loan trends over the next 2 quarters will be the most watched Money disclosure. If credit losses spike, the EBITDA story reverses quickly, particularly in an emerging market where consumer credit cycles can turn abruptly.
Consensus is strongly bullish, roughly 22 buy ratings versus 5 holds and 1 sell. The average price target of approximately $115 represents meaningful upside from the post-earnings trading range. The one sell-side holdout cites regulatory risk across 6 jurisdictions as the primary concern that keeps them out.
The bull case is simple: 3 accelerating segments, a $1 billion EBITDA quarter, and a flywheel that is finally compounding. Shopee is gaining GMV share while improving take rates. Money is monetizing that share through credit, and Garena is throwing off cash to fund the whole system. That is operating leverage at scale.
If gross margin keeps expanding, driven by AI-enhanced Shopee conversion and Money's scale benefits, and if Money's loan book stays clean, C could compound EBITDA at 30% or more annually from this base. The current valuation does not price a sustainable 30% EBITDA compounder. That is the fundamental gap bulls are betting on.
The bear case starts with Moni. Loans outstanding up 71% year over year is aggressive growth, and emerging market consumer credit cycles can turn quickly, particularly in Indonesia and Vietnam, where C has the deepest loan book exposure and regulatory oversight of digital lending is still evolving.
Garena is also a single franchise risk. The 41% growth is impressive, but gaming is hit-driven. Garena's prior multi-year decline from over 700 million QAUs in 2021 to under 500 million showed how quickly a gaming segment can reverse when the core title loses cultural relevance. Free Fire's engagement needs to sustain.
And competition in Southeast Asian e-commerce is intensifying. TikTok Shop, Lazada, and now regional logistics players are all pushing on Shopee's market share and shipping economics. GMV growth that compresses take rates would undermine the entire Shopee EBITDA narrative that is central to the bull thesis.
Options flow on the print showed elevated call volume in near-dated strikes, consistent with momentum traders chasing the 8% move. Implied volatility cooled into earnings and crushed on the print, the classic post-event pattern, suggesting the options market had partially anticipated the EBITDA beat.
No headline insider sales were disclosed alongside the report. Forrest Li's controlling stake through dual-class shares means the founder does not need to sell into rallies to monetize. The alignment between his incentives and long-term company performance is structural, not transactional.
Institutional positioning has been building for 2 consecutive quarters as the profitability thesis accumulated evidence. The Q1 print, crossing the 1 billion EBITDA threshold, is the type of milestone event that forces remaining skeptics to re-underwrite the model. Expect incremental institutional buying in the weeks following the report as models get updated.
The near-term catalyst is the Q2 print. The market wants to see EBITDA remain above 1 billion, demonstrating that Q1 was not seasonal, and Shopee take rate hold or expand quarter over quarter. 2 consecutive EBITDA billion-dollar quarters would remove the final skepticism about structural profitability.
Moni's loan book trajectory and credit quality will be the most scrutinized disclosures over the next 2 quarters. Bulls want to see loan growth stay above 50%. Bears want to see non-performing loan ratios stay flat or decline. That tension is what defines the stock's range through year-end.
Regulatory risk across 6 Southeast Asian markets is the structural overhang that never fully prices out of C's multiple. Indonesia, Vietnam, and the Philippines all have evolving digital lending, payments, and gaming regulations. A single major policy shift in Indonesia alone, C's largest market, could ripple through all 3 segments simultaneously.
C just crossed 1 billion in quarterly EBITDA for the first time. 3 segments accelerating, a flywheel compounding, and a stock that finally got rewarded. Watch Moni credit quality, Shopee take rate, and Garena user retention next quarter. Those 3 lines decide whether the next leg higher is earned or borrowed. Subscribe to Charged Alpha for the next breakdown.
Charged Alpha content is for educational and entertainment purposes only. Nothing you hear on this show should be taken as financial advice. We do not hold positions in the securities discussed unless explicitly stated. Always do your own research and consult a qualified financial advisor before making any investment decisions. This is Charged Alpha. We charge forward, so you stay informed.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.